You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 9th day of September, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. There's no credit card required. You get 5 consecutive trading days. Weekends don't count against your 5 days. And not only are you getting access to the live training room, you're getting access to everything. In fact, we treat you just like you are already a member for 5 trading days. Again, no credit card required. So at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you do is click the link in the email, and it automatically logs you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, just still want to join live. And there'll be days when you're busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But you don't have to remember all that, just youtube.com/CFRN. While you're there, be sure to click the subscribe button and tick that little bell. This way, you're notified anytime we go live outside of our normally scheduled hours, and it helps more people find our channel. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, We also archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. Now, if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips. And again, it does allow you to see how we've evolved over the years. youtube.com/CFRN. This is our daily schedule. Michael will join us at the top of the hour for a recap of what happened this morning in the live training room, and then do a little live trading on the TradingView platform. Now we'll start with our daily devotional, which is where we start each and every day. And the topic we're on right now, we're on day 4 of 5, enemies of the heart. Yesterday we talked about anger. Today we're going to talk about greed. Today's scripture is Luke 12, verses 13 through 21. And I'm going to share it with you from the Message translation. Someone out of the crowd said, "Teacher, order my brother to give me a fair share of the family inheritance." He replied, "Mister, what makes you think it's any of my business to be a judge or mediator for you?" Speaking to the people, he went on, "Take care. Protect yourself against the least bit of greed. Life is not defined by what you have, even when you have a lot." Then he told them this story. The farm of a certain rich man produced a terrific crop. He talked to himself, "What can I do? My barn isn't big enough for this harvest." Then he said, "Here's what I'll do. I'll tear down my barns and build bigger ones. Then I'll gather in all my grain and goods, and I'll say to myself, 'Self, you've done well. You've got it made and can now retire. Take it easy. Have the time of your life.'" Just then God showed up and said, "Fool, tonight you die. And your barn full of goods, who gets it?" That's what happens when you fill your barn with self and not with God. Again, that was Luke 12, verses 13 through 21. Watching out for greed. The third enemy of the heart, greed, it's when we feel that we deserve more and more worldly wealth and good. Greed says, "I owe me." Jesus said, "Watch out. Be on your guard against all kinds of greed." Why? Because of the 4 heart conditions we're considering, greed is the most subtle of all. Greed can take up residence in the heart and live there for years undetected. The unguarded heart is highly susceptible to this debilitating disease. It's difficult to diagnose, especially to self-diagnose. Jesus went on to uncover the lie that fuels all greed. Life does not consist in an abundance of possessions. But doesn't everybody know that? Do people really believe that their lives are equivalent to what they own? The answer is no and yes. No, not everybody knows that. And yes, there are people who believe that your life is pretty much the sum total of what you own. And many of us today are more prone to believe this than we might imagine. After telling a parable, Jesus gave his definition of a greedy person: someone who stores up things for himself or herself, but isn't rich towards God. Being rich toward God is Jesus talk for being generous toward those in need. A greedy person is the man or woman who saves carefully but gives sparingly. Generous giving will break the grip of greed on your life. So whether or not you think you have extra, give and give generously. You've got to give to the point that it forces you to adjust your lifestyle. If you're not willing to give to the point that it impacts your lifestyle, then according to Jesus, you're greedy. If you're consuming to the point of having little or nothing left to give, you're greedy. If you're consuming and saving to the point where there's nothing left to give, you're greedy. I know that's strong. Actually, it's harsh. However, it's true. Break the power of greed through the habit of generous giving. It's a habit that changes everything. I encourage you to assess your generosity and giving over the last 12 months. What does your charitable giving say about your heart? Pray about what it would look like for you to launch into a new level of generosity in the next 12 months. Let's pray. Heavenly Father, keep our hearts from greed and from chasing after treasures that fade. Teach us to value what matters most: your kingdom, your people, and the eternal life found in Christ. Help us to be rich towards you, storing up treasures in heaven through generosity, love, and obedience. May we live each day with purpose, knowing our lives belong to you. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Hope it's a happy Tuesday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 65 points. The NASDAQ is up 12. S&P 500 is up 3. But the Russell 2000, our man in the street, is down 18 points. Get ready for the bottom to potentially fall out of the market here. This does not look good. What's in the green is very thin, and for the Russell, 18 points, that's 0.75% in the red. Now, I'm not saying the other markets always follow the Russell, but sometimes the Russell can give us a heads up, especially when there's this large a disparity between the two. Crude oil up 60 cents, trading 62.86 last. That's a gain of almost 1%. Gold up $7.10, trading 36.8450 last. Silver down 54 cents, trading 41.35 last. That's a drop of a little over 1.25%. In the Asian markets, at the close, the Nikkei dropped 184 points. Shanghai fell 19. The Hang Seng rose 304. That's almost 1.25%. And in the European markets at the close, FTSE up 21, the DAX down 88, the CAC up 14. So we had a mixed day in Asia. It was a mixed day for the UK. And at the moment, it is a mixed Radio Tuesday here in the US of A. Again, 3 of the major indices barely in the green, and the Russell 2000 pretty close to 1% in the red. We'll see how that changes between now and the end of the broadcast. The Department of Homeland Security announced yesterday it has ramped up on immigration raids in Chicago. The crackdown, called Operation Midway Blitz, comes amid a Supreme Court ruling allowing a similar operation in Los Angeles. The Supreme Court ruled 6-3 yesterday to overturn a federal judge's order blocking the LA raids. The judge had accused the government of violating Fourth Amendment protections, requiring reasonable suspicion in order to make arrests, and barred authorities from using race and ethnicity, among other factors, to conduct arrests. While yesterday's ruling was unsigned, Justice Brett Kavanaugh penned a concurring opinion that demographics supported the crackdown, saying roughly 10% of Los Angeles population, 2 million, is in the country illegally. Immigration efforts in Chicago come as President Trump has promised to defy Governor J.B. Pritzker and deploy the National Guard to combat the city's homicide rate. Things are going to get pretty ugly pretty quick, I think. French Parliament yesterday ousted Prime Minister Francois Bayrou in a 364 to 194 vote, marking the second collapse of President Emmanuel Macron's government in the last 9 months. Macron's minority government has struggled to build consensus on how to rein in the country's more than $3.9 trillion in debt. France's budget deficit reached 5.8 of its economic output last year. Now that's nearly double the European Union's 3% limit. Beirut, a centrist appointed in December, proposed tackling the deficit with roughly $51 billion in cuts, including nixing 2 public holidays and nearly $6 billion in healthcare spending. More conservative lawmakers favor cuts to EU programs and immigrant services, while more liberal lawmakers oppose welfare cuts and back tax increases. Still, members from each side of the political spectrum joined to oust Beirut after snap elections last year resulted in a hung parliament. Macron intends to appoint his 5th prime minister since 2022 in the coming days. Meanwhile, left-wing anti-government protests are expected nationwide. Guess things are going to get ugly over there, too. At least 19 people were killed and over 100 others were wounded in Nepal yesterday amid Gen Z-led protests over a social media ban. Tens of thousands of people demonstrated, some breaching barricades near the country's parliament building. The protests are centered on a ban last week on 26 social media platforms, including Facebook, Instagram, WhatsApp, YouTube, and X, and others. The outlets failed to meet a Supreme Court deadline requiring them to appoint a government liaison and obtain a license to operate. Critics accuse the country's prime minister of using the directive to crack down on free speech. TikTok, Viber, and several smaller outlets were cleared to operate. Now, TikTok was previously banned after being linked to over 1,600 cyber-related crimes. That ban was lifted last year. An estimated 7.5% of Nepalese citizens live abroad, many relying on social media to communicate. The country's home minister resigned yesterday. Curfews were in effect across the country. You think about Nepal and you think about some guy sitting cross-legged on a mountaintop going, right? But I guess there's a little more to Nepal than that. A bunch of angry teenagers who want their social media and have taken to the streets to try to get it back. I don't know why these companies just didn't do what was asked of them, but all right, moving to the U.S. The U.S. economy employed 911,000 fewer people than originally reported as of March 2025, providing stark new evidence that the labor market was downshifting long before this summer. Now, this feud between the current administration and the Bureau of Labor Statistics, well, if you can't see this for what it is, all of a sudden, out of the blue, well, 911,000 fewer jobs. Okay. The backward-facing data came in well above the expectations of many economists who had estimated that these revisions would be hundreds of thousands of jobs lower. The data covers the period from March 2024 to March 2025 and trims the average monthly job gains seen during this period, roughly the last 10 months of Biden's presidency and the first 2 months of Trump's, from a monthly average of 147,000 to about 71,000. If that's their only job, and if that's the best they can do, fire the whole bunch. Get somebody in there that can count. Are these the same people that count our votes when we have an election? I mean, American Idol, they can count millions of votes during a commercial break. But in the U.S., we have an election. Sometimes it takes months to get the results. How long is it going to take? Well, until we have enough to win. Oh, okay. Well, keep counting then. Apple will host its annual fall event today at its Cupertino, California headquarters, where the company is expected to debut its latest iPhone and Apple Watch lineups. The biggest news from the show should be Apple's highly anticipated iPhone 17 Air. Think of it as an iPhone that's been dabbling in Ozempic like the rest of us, not me. At 5.5 millimeters thin, it will be far slimmer than the standard iPhone and iPhone Pro. The standard iPhone is 7.8 millimeters thick, while the Pro is 8.3 millimeters thick. But the new 17, again, is coming in at 5.5 millimeters. That'll be noticeably different. According to Apple watcher Mark Gurman at Bloomberg, the Air's thinner design could come with some trade-offs. The phone, for instance, could have just a single wide-angle camera rather than the dual camera found on the base iPhone or triple camera setup found on the Pros. The phone will also reportedly come with a smaller battery, which, unless Apple is able to work some of its software wizardry, will impact battery life. That could make for a hard sell to consumers, who generally want phones with more cameras and larger batteries. Case in point, Samsung's own super-thin Galaxy S25 Edge wasn't exactly a volume seller when the company launched it earlier this year. But the iPhone 17 Air could also serve as a blueprint for Apple's foldable iPhone, which Gurman said Apple will launch in 2026. Samsung followed a similar formula with the S25 Edge, debuting the thin phone and then revealing its Galaxy Z Fold 7 in July. That phone, which features a design so thin that it barely has room for its USB-C port, is selling very well. Samsung said the Fold 7 sales have jumped 50% versus its predecessor. That's a thin phone. After a weak August jobs report, markets are nearly certain the Federal Reserve will cut interest rates by 25 basis points at its policy meeting next week, with some investors even betting on a larger reduction. Traders hope a more dovish Fed will boost equities after a choppy summer, but some Wall Street strategists warn that rate cuts may not be all good news for stocks in the near term. Investment strategist Ed Yardeni warned yesterday, that easier monetary policy could spark a destabilizing melt up in U.S. stocks without addressing America's labor supply shortage, strained by President Trump's immigration crackdown and an aging population, and a generation that doesn't seem to want to get up and go to work. We think that by cutting rates this month, the Fed would be stimulating an economy that doesn't need easier monetary policy, he said. Stimulating an economy that doesn't need stimulation won't create more workers to address the undersupply that's constraining the demand for labor. That is the most ludicrous thing I've ever heard. And this guy gets paid for this. He is the President and Chief Investment Strategist of Yardeni Research. Yardeni argued that with productivity improving and the unemployment rate still historically low, extra liquidity risk fueling a speculative rally driven by investor FOMO rather than fundamentals, the kind of rally he warned that often ends in a sharp correction. Well, I've been saying for months, we need a sharp correction if this bull market is going to stay healthy. It's just how markets work. And last, and on a lighter note, it's Girl Scout cookie time. And Girl Scouts of the USA is debuting a new cookie for its upcoming season. The organization announced Tuesday that Exploramores, a Rocky Road-inspired cookie, is being added to the lineup when its annual sales begin in January. Like the Girl Scouts' other cookies, which include the popular Thin Mints, Samoas, and Tagalongs, the Exploramores will be sold both online and in person at booths by local troops. And of course, the person working in the cubicle next to you will, of course, bring their child's cookies to the office and beg everyone to buy them so that their child can get a trophy or a banner or a bandana. That's what messages does that send to the kids? Your job's to sell the cookies, but I'll do it for you. And you can take the credit. It's one of the reasons we have the problems we have today with our youth. But we created it. Now we got to live with it. All right. Logic 247. That's our 24/7 around the clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver. We're in week 371. That's a little over 7 years. Over the last 371 weeks, we have issued over 20,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a very simple process that we teach all of our passport holders. This week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 27 alerts. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. So some of these numbers will have changed, and she will, of course, update it this afternoon, as she does each and every day. So at the time she did the recap, we were still waiting on the outcome of 10. That gave us 17 actionable alerts, of which 2 or 12% would have been stopped out, again based on simple market structure and a simple process we teach all of our passport holders. Now, every logic alert has an entry price, long or short, an initial target, and in most cases additional targets, and then a final trade to target. The purpose of the alerts is to help you learn how to read a chart. Yes, you can trade them. It's kind of hard not to. But I implore you to use them for the reason they were created, so that you can learn to read a chart. If you want to learn to trade for a living, the only way it's going to happen is when you learn how to read a chart. Okay? Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, 371 weeks is a long time, over 7 years. But years before we had Logic 247, we had our original alert service, the concierge trade alerts. Now they're different. In a number of ways. But number one, they don't come out around the clock. They're published as a static report shortly before the Globex Open each evening. Today, the Tuesday session began last night at 6 p.m. Eastern. The Wednesday session will begin tonight at 6 p.m. Eastern. So the CTAs are published 5 minutes ahead of the Globex Open each evening. Any day that I'm not going to be able to publish them ahead of the Open, I put a note in the discussion group, both in the members only and in the trial. And I also put a note to let you know when they are going to be on time, so you're ready. And so our track record of getting them out on time has been pretty good so far. Now that I just said that, I'm sure something will happen, and over the next day or two we'll probably miss one, but that's okay. All of our members, all of our traders, and all of our trial members had all of these targets last night, 5 minutes before the market opened. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a peek. We'll start with the S&P 500, the bellwether. Now, we had an inside day yesterday. Now, what does that mean? Okay, this is Monday's candle, this little green candle right here. We didn't take out Friday's high. We didn't take out Friday's low. That's called an inside day. Today, we have taken out yesterday's high, but we still haven't taken out Friday's high. At least not yet. Okay. Now we're sitting on top of support times 2, blue and climbing, and the black step line. Resistance is at today's high, 65.23.5, and then at the all-time historic high, which was put in last Friday at 65.41.75. Now keep in mind, this is the all-time historic intraday high. The all-time historic closing high is 65.12.5. Okay. Now, the high yesterday are on Friday, 65.41.75 intraday. But look where we closed, 64.88. It's like 60 points lower than the all-time historic high. But we're still positioned to make another run. But we have a doji on the day, and that represents indecision. So we know where resistance is. We know where support is. Now, we talked earlier about a sharp retracement. I mean, the 24%, that is the shallowest possible Fibonacci retracement. That's down around 61.49/61.50. keep this bull market healthy, I think we need to see at least a 38% retracement. I think a 50% retracement would be even better. Then the market could have lots of room to rally into the end of the year, giving us the infamous Santa Claus rally. The green line you see is called the BBC. It stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, as it did April 24th, we're bullish and expect higher prices. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Bull Bear Cross. Bearish, bullish. Now, as I said, price always reverts to the mean, and our mean is the BBC. So when you hear me say that the pullback to the BBC holds more often than it doesn't, that's just what I mean. Pullback held. Pullback held. Pullback held. Pullback held. And the pullback held, and then on the 24th we closed above. Then the following day we opened and closed above the BBC. That sealed the deal. And then we get a retracement, and the pullback held, the pullback held, the pullback held, and the pullback held. And guess what? Pullback held, and the pullback held, and the pullback held. Now this will not go on forever, okay? Trees don't grow to the sky, neither do the markets. For the markets to remain healthy, there has to be retracements. The deeper, the better, okay? So, when's it going to happen? What's going to be the catalyst? What's going to set it in motion? Maybe the Fed. But wait, the street says the Fed's going to lower rates. Shouldn't that send the market significantly higher? It should. But it all depends upon how you look at the information. So, the 30-minute chart is where all the alerts are created. The Logic 247 alerts and the Concierge Trade alerts that you were just looking at. These are the ones that are published 5 minutes ahead of the open. The vertical line separates today, Tuesday. Back here's Monday. Pretty flat day yesterday. The horizontal lines are the weekly trading zones. Those are published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones every Monday for our members for 15.5 years. A little longer. This was the opening candle last night. We opened at 65.07.75 and made a run up to 65.14. So I call it 6 points. You only need 2 points to get your goal for the day. So we got a leg, but we didn't quite make it all the way to the target. Okay. See where that is? We didn't quite get there. Okay, that's what this target's based on. So the market finds resistance. What's it going to do? It'll always do the same thing. Go look for support. When it finds support, remember the pullback to the BBC holds more often than it doesn't. It's going to go look for resistance. And when it finds it, what's it going to do? Go look for support. Then what's it going to do? It's going to go look for resistance. Now, this high right here. Okay, look all the way back to Friday. You see this right here? That's called market structure. Okay, we go back to the BBC support. We get one more bounce, but we don't quite make it up to the target this time. We get below the BBC, and then we drop. We hit the short target, and we hit the weekly trading zone. Now, these are the zones that were published yesterday morning at 6:15 a.m. Eastern. And again, once they're published, they're carved in stone for the entire week. So the zone is actually 64.92/93. And we actually spiked it a little bit down to 64.89 1/4. Got just below it. Support. We'll send the market looking for resistance, which it has found at the BBC. Remember, the pullback holds more often than not. Held here, held here, held here. And now that we got below the BBC and retraced, it's holding here so far. But 2 lackluster sideways days. The Dow. The Dow spent most of yesterday oscillating around this weekly trading zone. We're above it, below it, above it, below it, above it, never really developing any trend whatsoever. Going into the close, we caught a little bit of a rally yesterday. This was the opening candle last night. And we opened at 45,580. And from 580, we ran up to the target at 630. That's 50 points. It takes 20 points to get your goal for the day with the Dow. So the market found resistance right where we expected it. That set us back down to the BBC. And it's like we missed it by a couple ticks. Buyers came in, drove us right back up to resistance at the long target and red and falling. Resistance sends us back to support. Support sends us back to resistance. Back to support. Back to resistance. Now we get below the BBC and we get support where at the weekly trading zone. And from there, we get a leg and a retracement. And we're attempting to make a run at the high of the day, which is 45,735. The next zone overhead is 45,760. So the Dow is coming to life. Now, the Russell was the one deeply in the red. So the Dow's still trying to climb. The Russell seems to have leveled off for the moment. This is where, and again, the Russell yesterday did the same thing. It's above the zone, below the zone, above the zone, below the zone, just oscillating, not going anywhere, really. Here's where the Russell opened last night. We dropped to the BBC, gave us a bounce up to this swing high, which is this swing high right here. See? There, there. Now we spiked it a little bit right here, and we got up to this high. Okay? Again, that's market structure. Where there was previously resistance, you expect there to be resistance this time, until proven otherwise. Okay? Resistance sends us back to support. But this time we get below the BBC. Blue and climbing turns to red and falling. Down we go. Now, one of three things happens when price encounters a weekly trading zone. 70% of the time, it's consolidation. 20% of the time, rejection. Okay, see how we came down, hit the zone here pretty much to the tick, and got rejected. Okay, and then 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens, when the move runs out of steam, what will typically happen is price will retrace back to the zone it sliced through and then continue in the direction of the slice. That is a perfect example. Now, the Russell's consolidating sideways, and notice the step line on the way down. Black step line and red and falling, they were running parallel to each other. The step line is now hooked right. When the step line crosses red and falling, we expect a retracement back to the BBC. When the step line crosses blue and climbing, we expect a retracement back to the BBC. It's pretty reliable. Now, currently the step line is directly below red and falling. It hasn't officially crossed just yet. If price drops, it won't cross. What will happen is the step line will straighten out and follow price. If we continue to consolidate sideways as we have for 1, 2, 3, 4 30-minute candles, then you should expect a retracement. And when we trade through a short target, as we did here, often on the retracement, the underside of that target will become what? Good resistance. That's right. The NQ. Here's where we opened last night. We get a leg and a retracement. Support. Support sends us to resistance. We hit the long target to the tick. See right here where blue turned to red? Right there. There you go. More than enough goal for the day. Resistance sends us back to support. Pullback held, pullback held. That sent us back up to the long target and the weekly trading zone. Now we spike the zone a little bit, right up to where? This high. See, that is market structure. You should expect that to be resistance until when? Until proven otherwise. And if it had kept going, you should have expected resistance here. Okay? How far left do you have to look? As far as you need to. Resistance will always send the market looking for support, which it found at the short target. Now the short target was based off these lows right here from yesterday. Okay. Support sends us up to resistance. In other words, price pulls back to the BBC. The pullback held. Now we should expect another leg to the downside. Crude. Here's where we opened last night. We're trapped. We got the BBC overhead. We got the zone below. Now the zone 6235/6240. We got blue and climbing, which is bullish. So that manages to get us above the BBC, takes us right up to the zone, which is based off this bearish cross. When the red line gets below the green line, that's called a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. We pull back into the BBC, and then we finally break free and make a run all the way up to the zone. Which is $63/63.05. Resistance sends us back to support. See how we traded through the long target, and on the pullback, support times 2. The top of the long target became support, along with the BBC. So we get another leg to the upside and a retracement. Now the zone's 63/63.05, and so this pullback, the zone held a support, gave us another leg to the upside. Now this high today's high, okay? If you look left, remember this is Tuesday, Monday, Friday, Thursday. You look as far as you need to, okay? So you should be expecting resistance there until proven otherwise, right? Just like this was resistance, retracement, another leg, stopped dead in its tracks at the previous resistance area. That has sent price down below the BBC. Now we're sitting right on top of the top side of the long target. We got red and falling overhead. So I think the potential for this to drop through, we got a bullish cross right here. So if you short this, look for support at 62.45. Okay? 62.45. Play it safe, 62.50. 62.60 to 62.50. That would probably work. Gold. Here's where we opened last night. We're below, red and falling. That pushes us down into the BBC. And as we know, the pullback holds more often than not. So we get a leg, takes us to the long target, through the long target up to the zone. Resistance sends us back. See how we hit the very top of the long. Now the long target was based right here, where blue turned to red. Okay. Support. Another leg. Then the retracement. Pullback holds. Another leg, another retracement. And where do we find support? Right at that long target on the top side of it, which gives us another big leg. Okay, give us a high on the day of 37.1520 for gold. Now blue and climbing's turned to red and falling. We dropped all the way down to the weekly trading zone, 36.68/69. Remember, when price drops to a weekly zone, we expect support. When it rallies up to a zone, we expect resistance until proven otherwise. So now with red and falling overhead and us being below the BBC, I suspect we'll go back to visit at least this area here, possibly all the way to the zone. I don't foresee this churning around today, but you got to embrace all possibilities. Anything can happen. Silver. Here's where we opened. Just hugging the BBC. Then we pop up. We hit the weekly trading zone at 41.99/42 bucks. But it's not until here that we actually hit the target at 42.07. You only need 2 pennies to get your goal for the day in silver. Resistance sends a market looking for support. We hit the short target. We catch a bounce. We continue dropping. Now, this low right here, bullish cross. When you have a bullish cross, it leads to an extended move. The first time price revisits that area, will almost always be good support, and it was. Set us all the way back to the BBC. Now, this time, we broke through that support area. We found support right here, where red turned to blue, to the tick. The step line is attempting to cross red and falling, so look for a retracement back to the BBC. If it manages to completely get on the right side of red and falling. And that brings us back to the daily doji. Michael should be here by now. Michael, are you there? Michael's not here. Well, he'll be here in a minute, I suspect. Let me see if he's messaged me.
I am here.
Oh, he is here. Yeah, no problem.
My mother just sent me a message and I had to respond to it.
Okay. Everything okay?
Yeah, I think so. And I was reading through it. It's like pages and pages of stuff. And I think there's a page missing. That's what I was sending her. And she just sent it to me. So I'm gonna get that done right away. Not. All right. I'm ready. Let me just bring it right over here. Okay. Here we go. There we go.
Okay, looks good.
Excellent. All right. Good afternoon, everyone. Today is Tuesday, right? It is Tuesday, right? Yes. Today is Tuesday, the 9th day of September, 2025. So, if you have not taken a free trial with us, then go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button and we'll bring you to this registration page where all that I ask for is your name, all that we ask for is your name, your email, and your phone number. Then down at the bottom, gives you TradingView login ID. Once you do that, hit the register button. Okay. If you don't have a login ID, go get one. Click this link right here. And it's going to bring you to this page where all you need to do on this page is watch this video right here. TradingView platform. Watch that video. And then go get your platform, go get your ID and share it with us. Okay, once you do that, we'll be able to enable the indicators for you on your desktop. All right, so why this one square is outlined in red. That's weird. You know what I'll do? Let me copy this one, paste it. Nope. That's strange. Michael R., are you watching? You know what does that, I'm sure. Anyway, today, the 9th day of September 2025, 9/9/2025. We're up 52 ticks on the NQ. That was not the high of the day. We're up 29 ticks on the Russell. I believe that was not the high of the day. We're up 4 on gold. That was the high of the day. And we're up 18 on the ES, and that was also the high of the day. Okay, so that puts us at 670 on the morning session. Today it took 3 minutes and one trade to get $1,250. That was a Russell trade. And we took a total of 36 trades this morning. So on the month now we're at $6,677 over 6 trading days, averaging $1,112 per day. On the year, let's just look at this 158. We had gone 158 days of straight green until right here. We had blue. That's all right. On the year, we're at $191,122. That's over 153 trading days, averaging $1,249 per contract per 2-hour trading day. Now, following the 2420 blueprint, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, so far this year, you would have only had to trade just under 21 hours, and you'd be up $116,117 if you did everything exactly like I did. Okay. You would be averaging $5,589 per hour. That is a pretty darn good paycheck. All right, let's get back into the actual trades now. The majority of the trades today we had gold And the NQ had the majority of them. So we'll start out with gold and just work our way across. We don't have many on the ES, but the rest of them are quite a few. Okay, let's go through all this on the gold. All the way to the beginning. We gotta stop up there. All right, so there we are. With the gold, on the gold, we started out with a minus 15. Then it bounced around a line here, but I didn't get anything out of all that. It was bouncing around really quickly in there. We had a break even, then we had a +5 that got us to minus 10. Then we had a +4 that got us to minus 6. And then a little while later, another +5 that got us to minus 1. And then another +5 that got us to +4. And then we had a break even on that one. And that was it. That was it for the gold. Let's see, during the break, this was a trade right here that would have worked out okay. This was not a trade. This was a trade here that would have worked out okay. This was a trade here that would have worked out okay. This was a trade here that would have stopped. This would have worked out break even for me. This would have been a stop out to the tick. And this is still working right now. And that was it for the gold. So the gold had many good opportunities today. After the room closed, but while it was open, it didn't have too many. Well, it probably had a bunch that I missed because I was busy looking at other things. We're dealing with other things. All right, so on the Russell right here, we started out with the Russell. So where we got our goal for the day right here. We got 25 ticks on that trade right there, the very first one. Then on the next one, we picked up 10 more to get us to 35. Then we had break even. And it says we gained something here, and then we stopped out. I don't have what we gained, but I do have the stop out. We got minus 15 on the stop out. So whatever we gained on that one, I gotta go back and look, but it won't bother. We got minus 15 there, and that put us down to 20 on my sheet. And we gained 9 right there. That put us up at 29. So we had better than 29. I don't know what it was. So exactly, I can go look. I just don't feel it. Anyway, during the break, we had nothing. This is the closest thing right here. Maybe this right here would be the only trade, and it's still going right now during the break. So not a lot happening with the Russell today after the morning session. The ES, we only had a few trades on the ES. There they are. There they are. This is the whole day on the ES right here. The first trade on the ES, we picked up 16 ticks. Then we picked up 2, and then we had a break even. So we ended with 18 ticks on the ES. Now, during the break, well, this is where the break started actually right here. We didn't have any more trades on the ES going through there. And then the break started, and we didn't have any more trades during the break either. So we got the 3 trades that were available on the ES today. The NQ. Of course, go back to the NQ. Let's scroll back this way. Okay. Scroll back this way. All right. So our first trade here on the NQ was a break even. Our next trade was a plus 45. Then we got a 4-tick win that got us up to 49. Then we stopped out down to 24. Yeah, that's right, down to 24. Then we got a little win there up to 27. Then we went from 27 to 31. Then we stopped out here, 31 down to 6. And then we went from 6 to 26. It was a tough time today on the NQ for me. After that first 45-tick trade, I mean, look at all these break evens. We went from 6 to 26, and from 26, well, we had a break even, a break even, a break even, a break even. And then finally we gained something. We went from 26 to 42, then 42 to 46, then another break even, and then 46 to 50, and then we stopped out again down to 25. And then we had we went to 53, then went to 61, we had another break even, and then we stopped out again. And then we went down to 36. And then we had, I think, a 16 tick gain right there. That got us up to 52. And that is where we ended it. So we had a lot of trades. We had almost 20 trades on the NQ today, 19 trades. It seemed like a lot of them were break even. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I don't know. It seemed like there were more break evens than that. But we ended up with plus 52. Plus 52. And see, during the break. Now, when I go through this stuff during the break, what I'm looking for in hindsight, it's easy to do in hindsight, right? But if I put it like this right here, right, we go bar by bar. Let's go bar by bar. Okay, we're in the overbought. We're looking to bounce down off the midpoint before it comes out of the overbought. There it is. It all happened at once. That's the trade right there. So that would be a trade. Now we're looking for it to get back into the midpoint and the overbought. It didn't. It came off the midpoint, not from the overbought. It's going down. Got to go back up. It's got to hit the overbought again. It's got to hit the overbought and the trigger. There it is. Hit the overbought. Now it's going to hit the midpoint before it comes out of the overbought. There it is. It did it all at once. So that's a trade right there. And that gave enough to get the stop to break even. Now we change to green. That's arguably a trade right there. It's not really on the midpoint. It's right next to the midpoint, but you could go long on that, 23,770. And that would have stopped you out promptly. Okay. And if you do a bar by bar here. See how nothing's setting up here because the midpoint's adjusting. It's come out of the oversold down here at the bottom. It's come out of the oversold, but it hasn't gone into the overbought. So it needs to go all the way into the overbought before we're even concerned about it. Okay, there it got into the overbought. Now we need to get down into the oversold and come out of the oversold and off the midpoint. Still need that. Still need it. Still need it. Still need it. I'm only looking down at the trigger right now. It's got to get into the oversold before we're even considering a trade there. It just got into the oversold. But now it's nowhere near the midpoint. So the chances of this being a trade are really slim. Okay, it's going to come out of the oversold and reset the midpoint now, probably. Probably. Nope. Look, it went all the way down and hit the midpoint. All right, so that right there is a trade. This right here is a trade. That's unusual that it does that without resetting the midpoint. That it goes this far without coming out of the oversold. That's where we would reset it. But that right there is a trade at 23, 8, 10, 50. And that promptly stopped you out. Or me. I was trading it. And now we get the same thing going the other way. So right here, we're hitting the midpoint. We need a down close off the midpoint coming out of the overbought. All right, so we got it. That's your entry, 23, 8, 10. Isn't that the same place it was back here? It was 23, 8, 10. See, and that would have prompted you to stop you out. Just back to back, that is unusual. Okay, so now you're looking for something to come out of the overbought off the midpoint. There it is right there. This one right here. That would be a trade. And that's still going, still going, still going. If it didn't go enough to get your stop to break even right here, hopefully it did, but if it didn't, you'd still be in this thing. Now it's gone enough to get the stop to break even. Okay, and now you would be considering looking for long trades, but you're not anywhere near it right now. It's got to do that. It's got to get down to the midpoint and in the oversold. So right now it's hit the midpoint and it's in the oversold. So if the next bar comes out of the oversold, you have enough close. It didn't. The next bar could still do it. It didn't. So now you're not looking anymore. Okay, so now you're still looking for it to get back down into the oversold like that and come off the midpoint, which it didn't do, so there's no trade there. Now you're all the way up here at the top. Let's bring it down. I didn't bring up the question box. Anybody asked any? Nobody's asked any questions. Okay. So right there, you're looking for it to come down, hit the midpoint when it comes out of the oversold. Down here. Looking for it to hit the midpoint up here, come off the midpoint, close up off the midpoint when it comes out of the oversold. See, we're not there yet. Now we're at the midpoint and we're in the oversold. That up close takes it out of the oversold, but you're not off the midpoint anymore. You're below it. So no trade. Oh, that's current. And that brings us current. All right, so that's it. That's where we are. So there's some situations in there that were kind of tough. We had back to back. This one right here, and right there. When it travels a long way like this, it's usually going to reset the midpoint. Right? If it doesn't reset the midpoint like that, that's, well, the midpoint you're looking at was from all the way over here, from here to here. So if you were to draw this thing, it would look like this. Like that. That's the midpoint you're looking at. And that's a deep pullback. And it did the same thing on the retracement the other way. Went from here to here. Right there to there. You see. That's what you're looking at. And I'm surprised that both of those just stopped out without any movement into the profit at all. That is surprising to me. But nevertheless, we are here. The Russell right now, down close on the Russell would be a trade, and a down close on the gold would be a trade. Let me see if I can find my DOMs. Down close on the Russell, the high of this guy is 78.3, so you're looking at 77.3. And on gold, the high of this guy is 84, so you're looking at 83 on that one. Okay. So this and this, this and this, these are the trades as they sit right now. Wow, my mic was off that whole time. You guys didn't say anything. That speaks volumes. Or it doesn't. It speaks silence. Anyway, I walked through this whole trade right here. We got 5 ticks on that, and we took a break even on the Russell. The reason I didn't continue on with the Russell is because this was above the midpoint. Right? We had a chance for a trade here on this last bar on the MQ, but now I don't think we do. 39 up to, nope, we don't. The ES has a chance for a trade right here. It's going to give us an up close on this bar without it going any lower. 975 up to 1175 on the ES. Over here on the gold, I think the midpoint is at 3.1, so it can't go any higher than 4.1. All right, the ES is not a trade, so I'll cancel that order. The NQ is not a trade, the S is not a trade. The gold, it's right at the borderline right there. All right, no trade on the gold now. All right, there are no trades anywhere right at the moment. Let me look up here for a sec. Kind of a day we haven't. All right, we're above the open, so right now we're still in a green day, and we didn't get above yesterday's high, so that's good too. Right, we have higher highs and higher lows on the daily chart. Want to make sure we close above blue and climbing. And right now, you see how the black step line is about to cross. That usually happens right before it declines a little bit, before we get a pullback. So we'll see. I know it's Tuesday right now, and we are a week away from FOMC. So I want to suggest to anyone who's interested right now that you could buy options that expire next week. Stuff's going to be built into the price between now and then. Okay, it's going to be built into the price before it happens. So you could buy calls and puts. You buy calls because that's the most likely way it's going to go between now and then. Or puts, you could buy both just to be safe. You buy puts way out of the money. And they'll probably expire worthless, but they won't cost very much. Okay, just a thought. And I think, they're going to start building that in probably tomorrow. And the way that, if you look at the daily, the way this is set up here on the daily, let's just take a moment and look at that. Okay. Now, I don't know what Dwayne's got all his figures that he has hooked up. But every time the black step line crosses the MA1, it usually does it right after a run up, and then it's followed by a move down. Okay. Usually followed by a move down. So the market is gonna start setting up for next week. I mean, you could buy some stuff right now, like the all-time highs right here. If you look at the SPY, we go out to 7. Look at this one here. This is the UDAO. This is kind of like the SPY. It doesn't have as much liquidity, but it's like a 3x SPY, kind of, but it's on the Dow. But if you look at the SPY, just for argument's sake, with the SPY, and this is on a daily. So last week, right in here, I think I suggested buying calls. I don't know what's going to make it come back down to the BBC, but if it does come back down to the BBC here in the next, well, before the end of the week, if it comes back to the BBC, I will definitely be loading up because it is set up right here. Inclining. It's set up right here to make a big move up, right? From a daily perspective. I had done it all on another chart. I had shown it all on another chart where I expect prices to go. And it hit everything that I had said for the last week on the daily chart. But if you look at a bigger picture, let's go to a couple day chart. Okay. This is the actual leg length. It's pretty much from here up to there. I think that's it. Is that it? Nah, it's a pullback. I guess the real pullback would be way over here. I'm going to draw two lines. Draw one there and one there. I think that's right. No. This one keeps going up to here. That's it. Okay, so these are the potential target areas. I think this is probably the better one. That is a potential target area for the SPY going into next week on the upside. Okay. This one I think we've already hit. Yeah, we've already hit this. I think this one I outlined earlier. But if you do that there, you go out to the weekly. You know, people like Bert, they use weekly charts. And so this is what he'd be looking at. Well, like this one right here that I just did. That's from here to here. I believe that's right. From there to there. That's the kind of information that the bigger players are working with. So 689.46. If it really gets on a roll, who knows? You know, it's going to take days for it to happen. But if you get any kind of a retracement, then it should get back up to here, is what I would think. Okay. Just my opinion. But, you know, the opportunity is there. It will be there. It will be there. I mean, you could just go a little wild right now and buy calls and buy puts and just let it play out however it's going to play out. Maybe make money on both of them before FOMC comes out. But you could wait for the better opportunity where you know the calls are more likely to work out. It's up to you. All right, let's bring this back to a 1 day. And it was actually the UDL before, so let me put it back on the UDL. Something else that is good for trading. All right, and that guy is there, that guy is there. Let's go back to 4. See, did we miss anything? We have one setting up right now on the NQ. It's got a low here of 45, so you'd be buying 49 on the up close. Not 49 exactly, 49 and something. 49.25. Okay. The gold almost has a short, but not quite. And we're looking for the up close here. The closest thing we have to a trade right now is the same Q. And it's still the closest thing we have to a trade. But now it's going to be 48.75. And now it's looking like if we get a down close on this, it's going to be too far away. No trade on the NQ. Cancel. We could have something on the ES, but we're just about out of time. We are out of time. All right. So that's it. Did we have any trades? I don't think we had any trades. Anyway, we did have a trade. We had a trade on gold. So we made some money on gold, I think. We'll see. I'm curious. Hang on. I had all these cancel trades here. We had a trade on gold and a break even on the Russell. So on the gold, we made some money, and we made 5 ticks on gold, and we break even on the Russell. That's what we had. All right. So anyway, if you have not taken a free trial, let's go here to mytradingq.com, click on the purple button, no credit card required, fill out the registration page. When you're done, make sure you give us a TradingView login ID on here. When you're done, you'll get all the information you need to get your indicators indicated and get into the room with us in the morning. All right. That is it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A. We're looking south of Mountain, America's largest city park. Dwayne, if you are ready.
Yep. Recap of the morning session.
Today it took 3 minutes and 1 trade. It's $1,250.
Good job.
So Dwayne, looking forward to the FOMC next week, what do you have for projections?
Word on the street is buy the rumor, sell the news.
It's bad news?
Buy the rumor, sell the news. So people will be buying into that announcement where everybody anticipates either a quarter or a half-point rate cut. And once it happens, then everybody's going to realize that, oh, this didn't exactly change the world, and we could have a pretty sharp sell-off.
Yeah, I'm thinking that's what's setting up. It's setting up a sell-off, but I think we're going to build up over the next few days up to Wednesday.
Yeah, we very well could rally. We're right up until the announcement.
Mm-hmm.
And then we'll probably get, an initial burst to the upside when the announcement comes out, whether it's a quarter point or half a point. Now, if we end up not getting a cut,
that'd be horrible news.
That would be pretty ugly. But even with a cut, most of the analysts think we're headed for a pretty sharp retracement.
Yes, that's what it looks like.
And look how long it's been
since we've had a deep one.
Since we had this bullish cross, we were in a decline from February 21st to April 7th. And we got back above the BBC on April 24th. And so, this thing's just starting to kind of arc over.
Yeah. It's starting to flatten out, roll over.
Yep, it's coming. But we definitely could see higher prices before the Fed, and probably the day of the Fed if he does cut rates. But after that, it's and I mean, this is the shallowest possible retracement, 6149/50. That's the shallowest possible Fib retracement. We haven't had a 24 in a long time. To keep this thing healthy, we should probably see a 38 or a 50. Then from 50, we could rally into the end of the year, have the whole Santa Claus rally and all that. So we'll see. Yep. Okay.
We'll see if it plays out just like that.
All right, guys. If you missed any of the markets that we covered today, 30 minutes to an hour after I sign off, you can go to youtube.com/CFRN and watch the entire broadcast in its entirety. We went through all the different markets in a granular fashion, so you can see it all. There's over 2,900 daily episodes archived at youtube.com/CFRN. And in about an hour, there'll be one more today. To become a member, send Valerie an email, support@cfrn.net. Let her know you want to become a member. She'll send you the information you need to become a member. She'll give you a link that you can click to make your payment. Once you do that, then she'll send you several emails. Create a folder in your email client and put those emails in that folder. A lot of the stuff she sends you, you won't know what it is right away. You won't understand it. Oh, I don't need that. No, you need it all. She's sending you everything you need. So just put it in that folder. And as you begin your journey of learning how to read the charts, learning the methodology, learning how to read the indicators, learning the strategy, all of that, you'll need everything she sends you, okay? And you'll know where it's at. As a passport holder, you get 2 hours of live interactive training every trading day. You also get private one-on-one mentoring at your request. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flow is the same across all markets and all time frames. Just as I showed you today on every one of the markets we went through, from support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. That's simply how markets work. As a passport holder, you get the Logic 247 alerts around the clock, the concierge trade alerts, the second they're published each evening, typically 5 minutes ahead of the Globex Open. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. And every Thursday afternoon, you get your invitation to the members-only workshop every Thursday night at 8 p.m. Eastern. And last but not least, you get the golden keys that open all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. Just email Valerie, support@cfrn.net. Let her know you're ready. Okay, good word for the day. Rest and relaxation are essential. Mark 6:31. Jesus said, "Let's go off by ourselves and rest." God instructed the observance of the Sabbath day with good reason. Rest from our labor. Now, if God felt he should rest after 6 days of creative activity, how much more should we? Jesus was a big advocate of taking time off. Once, he sent his disciples on an evangelistic journey. When they returned, thrilled about all the wonderful miracles that had happened, you would imagine that he would urge them to maintain the momentum. He didn't. Then Jesus said, "Let's go off by ourselves to a quiet place and rest a while." He said this because there were so many people coming and going that Jesus and his apostles didn't even have time to eat. So they left by boat for a quiet place. Note the words, people coming and going. Does this sound like your normal day in which you rarely get a chance to take a breather? Jesus was concerned that his disciples would get out of balance. What did he know that we continue to miss? He never rushed around, never seemed to be harried or controlled by the crowds. He kept his priorities in order and always managed to complete what he set out to do. Jesus knew the importance that rest and relaxation played in his disciples' continued effectiveness. But timeouts won't occur without firm determination and planning. You must view such times just as important as any other undertaking. Father, help us all to make rest a priority in our lives. Help us to stop dishonoring our body, this temple you have given us, to perform our purpose here on earth. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.